Hey guys. So lots to talk about today. Before going into SPY, let's take a look at some damage. What happened yesterday, and it's extensive and crazy bad. None of my bullish predictions came true, but that's okay. We had a lot of breakdowns yesterday. For example, CAT broke this uptrend, big candle down, volume spike up. It was 6%, which is quite unusual for CAT. Um, Deer, same thing, broke the uptrend, big candle down on the breakdown. Still also dropped more than I thought it would. It didn't stop at the buy zone. Next one is here. New Coral the same. This is Freeport McMoran. Broke the horizontal support. I think copper broke down as well. Let's see. Copper didn't break down yet. He's still holding for valiantly. And the graph should have been identical to copper, but FCX broke down. CVS can stop the bleeding. If you remember the post I did at the beginning of the year when I said healthcare will go down, this area was the target. We're coming to horizontal support. If this one doesn't hold, like 74, 75, it will actually go to 56. It should see at least a bounce here, like, yeah, but I didn't really expect it to not hold any of the support. It just went down 17% candle on the quarter. I thought it would bounce. I tried to play it a couple of times, lost some money, but it's okay. Back to the daily and see what else is breaking down. This Disney would losing horizontal support as well. Alcoa losing the trend line, the channel right now, and going below it quite aggressively, 6% down. Tech accelerating down. Devon with new lows. Some with new losing horizontal support and making new lows. It might finally break down. Well, you get the idea. Marathon Oil losing the trend line. I thought, again, it lost it the previous day, but showing continuation. Continuation is bad. Even if we go up, this is unlikely to be bullish, like it will do this. And this is kind of the target. Fang, big candle down. This pennant here is probably going to break down and we go to fill the gap. Oxy holding up well, but whatever. I wanted to talk about BTU a bit because it's on the brink of collapsing. If we continue down, basically we have this horizontal level here. If this doesn't hold, we should go down quite a lot. $21%, $7. So we should go to $14, double that up around here. Yeah, seems about right. It's gonna make a big channel like this, or a big range to play. Range lows, range highs, midpoint. So I think we're at the midpoint. Let's see. Let's measure from here until here. 50% is 25. Yeah, it's exactly the midpoint, 25.62. So basically we lose the midpoint and it's free fall from here. And we can go as low as this. It doesn't have to go that low, but it can go that low. So big point here for BTU. If it doesn't bounce, it has a big drop to see. Shipping also dropping. Yeah, let's look at the big boys. Tesla lost This is a support area here between 178 and 163. It went below it, ascending volume down, ascending volume while dropping. So this isn't looking very good. Apple closed below 150. Can also accelerate down, a small spike up in volume. Tech has held up incredibly well, but if it stops holding on, we're gonna see a flush down. Nvidia breaking the uptrend, but still holding this small horizontal level here. I think below 225 is where it actually goes down quickly. We have this gap here. This gap will be like slow, 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 fast, and then maybe slow, slow, slow again. Google, Microsoft, Amazon also testing horizontal support. We will retest the lows if this doesn't hold here. Facebook slow to turn as well. Same situation as Nvidia, so slow, 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 fast, and then whatever. Netflix broke the channel, had a 4.49% day yesterday, the day before, and yesterday it was just continuation down. Small pickup in volume. I don't know. XLE down, XLE horizontal support. This is a big level for XLE, like you can immediately see it. I think it's also similar to BTU. So let's look at it. 50% is here, but maybe I should measure from here, something like this. So 50% is a bit lower. But yeah, if I do the monthly, it's probably easier to see. So I think it's 80. So the fib showed it well. So it's most likely something like this. But you can still see with the naked eye that this is a horizontal level. So most likely we can go to 80 without breaking down, but if we lose 80, like overshoot, go back up. But if we lose 80, it's all over, and we're gonna go for the range lows. Is it this? I think this is it, the range lows, and the range highs, this. Let's measure it again. 50% is 81. We lose this, it's gonna be a fast drop. We still have this gap here at 73. Looks pretty bad if we have continuation down. XBI breaking down. XLF, not even worth talking about. It was dumping like crazy. Healthcare was dumping like crazy. Tech was holding up surprisingly well, but the the horizontal breakdown level is visible here as well. If we lose this, we double this. So it's, let's call it $9. We go to 18, something like this. Yeah, we go into into this horizontal level. This is an overshoot, just like this was an overshoot, like this here. This one was not an overshoot, it was more than that. It was to the next level. But this range here, we're gonna go through it. Cree. No comment. I think this keeps falling. Like, this isn't what I would call support. Like, we can have a short-term bounce, of course, but I think it goes here, 43. And maybe bounces here. Yeah, it's a big horizontal level, this one. Around here, and since it's here, why not just fill this gap? What else? EVs, don't care about it that much. Healthcare, we looked at it and it's horrible. Or we looked at CVS and it's horrible. Let's look at memes. Horizontal level for ape. It will fill this gap. Beyond, I like Beyond a lot as a play. Was looking at it on Friday, but it didn't trigger. So basically, when this line falls, it should flush down to at least 13. Horizontal level. Carvana. This one triggered, but I forgot about it. I was looking at the same thing as with like this, back tested, and then also this. What was this? 13%. I completely forgot about Carvana. Whatever. Semis. Semis are the ones holding the market up. TSM, same look as Nvidia. Like if it loses the horizontal level, it will go down here. It has two gaps to fill. I don't see why it wouldn't fill them. When tech gives in, the market will have the next leg down. Qualcomm didn't go up, it went down. Holy shit, Intel was green on Friday. A couple of the stuff from the stream. Let's see if anything catches the eye. Though hit its target. If it doesn't hold here, this 51. BTI still looks kind of solid. Like we're actually in the defensive, in the time where defensive stuff should start performing well. Race, maybe it finally breaks down. Need to lose this horizontal level as well. And then things can start to get fun. Velo 3D, it says support here. Next one is here, 191. Baba lost horizontal support and it accelerated down like on the first day candle, the minus 4%. Sophie got hit by the regional bank stuff. Ooh, G looks nice for a short. So it has this huge gap down, now inside 8 but down. Basically, once it loses this, it will fill the gap and probably continue down. This is like an exhaustion move. This is the equivalent of a blow off top. Lift, losing horizontal support, flush down. Horizontal supports matter. Uber is in the support zone, but I don't really see it holding. I think it goes lower. Even PFE hasn't held horizontal support. This is a range here, like it can go as low as 38. Okay, and now let's look at yield. So horizontal support, big flush on Friday. The market as of Thursday has started dropping together with yields. This is the true recession pricing. Like yields or bonds and stock are inversely correlated. And what we're seeing is a flight to safety into bonds at the current yields, or they were a bit better a couple of days ago. Uh, this is a drop across the board. Like this is a huge trend break. Look at how these ones were behaving. So 4 months, big huge break of the trend. Big red candle, the first one in since forever. 1 year the same, 2 year the same. Like this, we had this as well, but back to back like this, and I think it will continue on Monday, especially if and next week if CPI comes in not that hot. Trend break, trend break. Like even if like we have this comparison for the 2 year, but what followed after this? It was another 2 months of drops. So this is what we're expecting as well now. And the XY kind of doing the same, and everything is positively correlated now. So when the market drops, dollar will drop, and bonds will go up. So meaning yields will drop. Why is this a recession play? Because with the bank failure, the market believes the Fed finally broke something. So if the Fed finally broke something, it means cascading effects, systemic risk. This is TDEX, tail index. So this measures how prepared the market is for a tail event, like a market crash. And this closed yesterday at 48%, but at one point during the day it was 112%. So this was, what did we get? It was the highest in not in May, in January, but like we lost this horizontal level, we went lower. The move is equivalent to the January thing. This was December 2021, let's say January. So let's measure the move. 142%, and this move was 165%-ish. And what did we get this week? We got 258%. So the market really got scared of a tail event, and this is what we're seeing with the bonds being safety. So market is scared that the Fed broke something, and they're retreating into bonds. Bonds are going up, yields are cratering. At the same time, market is going down, dollar is going down. The dollar will go up at some point, but this is the true recession fear. Nothing else matter. We're scared of recession. We're scared that the Fed broke something, and we're behaving accordingly. And if the Fed broke something, before you price in the rate cuts, you price in recession. So that's why we're seeing value stuff getting hit so hard. Like this is why CAT broke down. This is why DARE broke down. Why CLF is and still is doing badly. Why AA is doing badly, and so on. So industry is getting fucked really hard. Uh, Commodities haven't been that hit, or they dropped before that, like this. HRC is is looking very toppy. Oil dropped the last couple of days. It didn't drop on Friday, but it did the last couple of days. Like this drop here to here. Brent, same thing. Uh, so this is kind of the situation now. Now back to SPY. So we start a blank slate. On Friday, we had huge volume. We almost had back to day 90 devol. The worst hit was IWM. We had minus 5.5-ish. No, sorry, 7-ish. In 2 days, broke the horizontal level. This is what happens on horizontal level break, and this should be the same size as this. So let's see, this is 12, so 24, and look where he stopped, at around 24. And this is also a support area, like this is a demand zone. Like this. It can go as low as here. And this is probably the midpoint, like midpoint relative to the lows. We can measure it as well. Yeah, it was 50% at what, 175.35. So we're seeing a bounce on this range at the 50% level. If this doesn't hold, I mean, it should create a small bounce, maybe as high as this, 181, but then continue down, and we should see the range lows by the end of the month. But getting back to SPY. So the first thing we have to look at, or we notice, is this volume spike. Very, very, very high volume spike. And in general, when these are more consistent with bottoms than with further downside. And I can't actually pin it to the volume, so we look here. So this was in the bull market, but whatever. Volume spiked down, and it was a bottom. Here, even though the move down continued, it was a local bottom. Like we had another gap down, and I think this is what we will see on Monday, and I'll explain a bit later. But zooming back in, even in the bear market, when we went to these extreme volumes, the next day we bounce. Here, the same thing. This was a both of these, this and this, were gap downs, which were bought, and I think we will see the exact same thing on Monday. So gap down and bought. This one was not the bottom. This was the start of a move, but it wasn't that high. This one was closer to the bottom than the top, and that's kind of it. Again, this was a bottom, this was a bottom, this was a move up, so we don't care, but it was a top. So the volume tells us that chances are the short-term move down is exhausted. But what I expect is exactly this. So Monday, big gap down. It opened here. It continued even lower. This was a move outside Bollinger Band 3, and we'll look in a second. It gets bought up, short-term bounce, and that's it. Same here, same here. A move outside Bollinger Band 3. It opened here, and it gets bought. Let's look at our situation. So it's difficult to get below Bollinger Band 3, but a gap to 380 can happen, and I still think it gets bought up because we're short-term oversold, and that's kind of it. Again, this is an relatively extreme situation, so no guarantees that it will happen, but I think we either get a push down on Monday to get to the target, to the first target. So let's start putting stuff back in. So this is Feb range on the monthly. So this is the Feb range on the monthly. Then we have the January range which is this, the red one. Jan range. And then we have the quarterly range, which is the purple one. The purple one is this, so quarterly range here. Come on. We can take out volume, we don't care anymore. Okay, so going back to the daily. So we haven't triggered a free down on the quarterly. A free candle is an engulfing candle. So on the quarterly, from my Uber berry scenario, like the dream bear scenario, once we pass the 50% level on the quarterly, we are in active 50% sequence, and the target is to take out the lows of the candle by the end of the month, by the end of the interval. But the interval for us is the end of the month. So if we get a close below the 50% level, all bets are off. We can go down a lot and even take out the quarter lows. I don't think that will happen quite yet. It's a possibility, but it requires CPI to be hot and the Fed to do 50 basis points. We'll see if that happens. It's on the table. If not, the most likely outcome is the lows will be 370. So uh, we lost the 50% level of January and the lows of February, and again horizontal support. We have a flush down on after that continuation down. And for Monday, either gap down, like gap down to here, it gets bought, we close very high, something like this, and we go as high as this, and then whatever CPI tells us, we'll see. The other option is a push. We don't gap down. We open normally, and we still get a last push down to these levels, and then we bounce up, and the same thing happens. The move is too. We've gone down too much too fast, and we have to stop. Even here, like 1, 2, 3 candles, that's enough. And we have 1, 2, 3 big candles. Maybe we can get the fourth, but the fourth is most likely going to be something like this, or not the fourth. After the fourth, we should get the green candle, and of course it can be in the same candle. Like we both go down and go up in the same candle, but the candle will be green. Other references like this: 1, 2, 3 candles. Fourth one was stabilization, then up. So yeah, sort of like this. Uh, Either gap down, we go here, we bounce, and let's also do like some Fibonacci levels. So this was the bottom of the first move. We are at 127%. This is would be a first target level, but most likely the second wave of Elliott wave sequence, the target is usually 161%. So we would have to go to somewhere around here. Maybe we can call this an overshoot, and if we make this the top, it's exactly this level, like just below 380. And we would go down. Then we move this here to, let's say, that what the target is, and we will see a maximum of 50% retracement. So let's assume we went to here, and we want to see a retracement. The most common one is 61.8. So it would happen like this, go to 61.8, this level remains resistance, and then we start the third leg down. So this was leg 1, pullback, leg 2, pullback, and the final leg, which usually ends at the 127% Fibonacci extension. And that's it. And this is the whole, then we have the ABC wave, which would be something like this. And again, it can be like 50%. Let's assume this also happens. So this would be up to here as well. So we go here, and that's it. And then we'll see. Too much to predict right now. Too far in the future. I can draw it with don't remember where it was. Elliott impulse wave. So let's do this. So 1, 2, this, and then the ABC wave. And before doing that, move it here. And ABC wave would be, I don't know, something like this. Okay, so let's look at delta for a second. So I did a couple of things. So this is, no, sorry, this one. So this is OI for next week. The biggest level is, the biggest interest is for the quarterly expiration, obviously. But what can we see here? There are no calls below 390 basically all of next week except for the Friday expiration. And the delta shows this, like zero call delta until Friday. I mean, the Friday delta counts, but what I'm saying is there is nothing here to push us up. And one of the things that is bothering me is that put to call OI isn't going down for the bull case, I mean. And then so this is the delta profile until Friday, and this is the OI profile after Friday. And again, there are no calls here. If we would go to this level, we need calls to appear around the current price level to push us up. Until that happens, we want to reverse this. And the chances of call OI suddenly appearing, and a lot of it, are minimal. It will take a while, like a couple of weeks of us staying around. Let's say we go to 370. It will take at least 1 week, but most likely 2 to 3, of staying around that price level before we build up enough call interest to be able to push price. Like this, all of this is left behind. If we are here, we need this to appear at this level. And this is the delta profile that was OI. This is the delta profile beyond that threshold. Like we can see, we have a bit of call OI for the end of the quarter on 370, but not OI, sorry, delta, but it's very, very small. I just keep mixing them up. And this is a projection. This is what put to call OI looks like now. Going down. This is what it looks like now. taking out all of next week's OI, after Friday's expiration, it will look like this. So instead of going down, it will go back up. This is very, very, very bad for bulls. Like, what we want to see is this. As price moves down, profit is taken on puts, and new call OI is added, which will shift the ratio down. And I'll show another thing in a second. This is what we want to see. Until the put to call OI starts going down, there will be no bottom. And even if we get a bullish CPI on Tuesday, like, it won't change the situation much. It will just give us the scenario I gave there, which we go here, then we bounce and we test here. This is still a pretty big range to, like, it's 4%. Maybe we get a flat day tomorrow, like we go down, not tomorrow, on Monday. We go down, we gap up and we close flat. That's still a 2% swing. And then on CPI day, if CPI is cool, we get another 2% up. And that would be it. But on Friday's expiration, the balance shifts again towards in bear's favor, and we will resume the downtrend. Most likely, it won't take until Friday. It will happen sooner than that. But this is worrying. We want to see this for the bull case, and the only way we see this is if we start seeing call OI around these levels. Like, all of this is completely useless at the moment. Like, there's no way we get back over 400 anytime soon to activate this and to deactivate all of this. This will get more and more active. This will get more and more the deactivated, and it looks like shit. Like, the case for the bulls is very, very bad. They need to buy the dip at current price and build up OI at current price. Now, last thing is, let's see what the rating indicators show. So we are at 10%. We went slightly below it yesterday when we were around 385. This is the post. It closed at 385.91. This is the post market price, so it doesn't really matter. As you can see, most of it is red. The only thing that is green. The only thing that is red is the price put to call OI. Were I to make this like at the buy point, which was, let's say, 1.6, we can look back and see when was it green. So 156, 160. Let's look at the June low, which was the extreme green, which had a print of 0. So it was 144, 150. So I'll not make it super green. I'll make it 160. You can see that this goes more in the green, and uh, it would make it a buy. But since we are not at a buy point, this one is red, it affects all the other metrics. So let's look at where does it become a buy. I'll just show it to you. So 369.9. If price were to go below 370, we would be at 4%. And this is in the context of the put to call OI being high. If when we get to this price, let's make it 1.7 just for the sake of argument. It's not super green, but it's no longer red. It doesn't change much, but 1.5. It's almost a 0. So if put to call OI would shift more in favor of calls instead of puts, this would be the most oversold market since the June bottom. So this is what we need to look at in the future for buying the dip. Like there will be local dips, and reset everything. There will be local dips, but until we get a shift in positioning, meaning more calls appear and puts are taken off the table because they are not renewed. Like imagine we go here, you start selling your puts because you take profit, and beside this, are you a buyer of puts at this level? Most likely not. Or let's say we go even lower at 360. At 360, who the fuck buys puts at that level? Like you have to be an idiot. You buy the whole for sure. So nobody's gonna buy puts. Everyone is gonna be selling them. Uh, and what I mean by this is like they won't be refreshed. Like let's say you rode it from 400, you wrote it down to 360 for March. Are you buying puts for April at this level? You're probably not gonna buy them. So they are not refreshed. What are you buying? If we get to 360, you're buying calls. So more call OI is created. The put OI is not refreshed, and that will shift the balance. And when that balance shifts, we get what I showed here, like this moves down, and then we can be more certain that a bottom is in, and even if we get another push down, the the push won't be that substantial, and we can be relatively uh, secure in a bullish positioning. Yeah, that's it. Thank you for watching. Have a good day. Bye bye.